Most people think inflation is just about rising prices, an annoying economic buzzword that appears on the news whenever groceries become expensive, but the truth is far deeper and far more disturbing. Inflation has quietly shaped wars, toppled empires, rewritten global power structures, and engineered the very world you live in today, all while remaining invisible enough that most people never question where it truly comes from or who actually benefits from it. Welcome to Dollaroid. To understand how inflation shaped our modern world, we have to rewind to a time long before central banks and global markets, back to the origins of money itself. Early civilizations used metal coins not because they were shiny or convenient, but because their scarcity kept rulers in check. You couldn't simply create more gold out of thin air. But the moment leaders learned they could shave coins, dilute metals, or quietly reduce purity without telling the public, the world's first inflationary trick was born. Rome perfected it. As the empire expanded, military campaigns became outrageously expensive. Instead of raising taxes, which sparked revolts, emperors quietly debased the currency. Each new coin contained a little less silver. At first, nobody noticed. Then inflation surged, soldiers demanded more payment, merchants raised prices, and the empire spiraled into one of the earliest documented economic collapses triggered by hidden inflation. The pattern was set. When rulers needed money, inflation became the silent tool of power. Fast forward to the 1200s, and the Chinese Song dynasty introduced paper money, an innovation that changed everything. For the first time in history, value could be printed, not mined. And almost immediately, the temptation to print more became too great. Overprinting led to hyperinflation so severe that the currency became worthless, and foreign armies walked through a financially broken nation that could no longer pay its own soldiers. Inflation wasn't an accident. It had become a weapon, sometimes used intentionally, sometimes through desperation, but always with dramatic consequences. Then came the Renaissance and early banking families like the Medici, who realized something revolutionary. Inflation could be managed, directed, and even profited from. By controlling money supply, bankers could influence kings, shape wars, and tilt the balance of power. But the real transformation began in 1694 with the creation of the Bank of England, the first powerful central bank built specifically to lend money to a government at interest. Suddenly, inflation became systematic. Wars were no longer limited by treasure chests. They were financed by debt. More debt required more money creation. More money creation meant more inflation. And more inflation meant more dependence on the banking system. Cause and effect. By the 1800s, nations across Europe adopted similar systems. Inflating the currency became a strategy, sometimes to stimulate economies, sometimes to pay debts, often simply to maintain the illusion of prosperity. But the biggest turning point came in 1913 with the creation of the Federal Reserve. For the first time, the United States had a centralized institution capable of expanding the money supply on command. Inflation became engineered, controlled, and predictable. Or at least that's what people were told. Only 1 year later, World War I erupted. Governments discovered the magic of printing wartime funding. Prices skyrocketed, savings evaporated, and the world stepped into an era where inflation was no longer a side effect of crisis itself, became the justification for inflation. After the war, Germany attempted to print its way out of debt, leading to one of the most catastrophic hyperinflation events in history. Children played with stacks of worthless notes. Salaries were paid twice a day because waiting even hours meant losing purchasing power. One loaf of bread cost more than a lifetime of savings. And in that chaos, a failed artist named Adolf Hitler found a desperate, angry population looking for answers. Inflation didn't just shape economics, it shaped geopolitics, nationalism, and war. Cause, effect, consequence. After World War II, the world's leaders were determined to prevent this level of chaos again. They built the Bretton Woods system, pegging global currencies to the US dollar and the dollar to gold. For a moment, inflation seemed under control. But governments still wanted to spend more than they earned, and tying money to gold made that difficult. The Vietnam War and massive domestic spending forced the U.S. into a corner. In 1971, President Nixon made a decision that would permanently transform the global economy. He ended the gold standard. From that moment on, money was backed by nothing but trust, debt, and government promises. Inflation was no longer a hidden tool, it became the foundation of the entire financial system. The modern world was born. Without gold limiting supply, governments could print endlessly, and they did. Inflation soared in the 1970s, hitting double digits. Ordinary families struggled while financial institutions grew richer. Every dollar printed made existing dollars worth less, quietly transferring wealth from the public to those who held real assets, land, stocks, businesses. And as inflation worsened, the solution created even more problems. Governments raised interest rates, triggering recessions. People lost homes and jobs, but the financial system survived, stronger than before. The lesson was clear: inflation punishes citizens but protects governments and banks. Cause and effect. By the late 20th century, inflation was normalized, accepted as a natural part of life. But behind the scenes, central banks and financial institutions were rewriting the rules. Offshoring reduced production costs, hiding inflation by lowering prices. Technology made goods cheaper, giving governments room to print more money without immediate price spikes. Debt exploded, consumption surged, and people believed inflation was under control. Until it wasn't. The 2008 global financial crisis marked another turning point. When the system nearly collapsed, central banks did what Rome, China, and Germany had done before they created more money. Trillions were injected into the economy. But this time, something unusual happened. Regular people didn't get richer. Asset holders did. The stock market soared, real estate exploded. Wealth inequality hit levels not seen since the Gilded Age. Inflation was doing exactly what it was designed to do: move wealth upward. The public saw the same grocery prices. Meanwhile, the rich saw their portfolios multiply. Then came 2020. In response to a global shutdown, governments printed more money in 2 years than in the previous 2 decades combined. At first, people celebrated stimulus checks, cheap loans, and booming markets. But then the delayed effect arrived, supply chains collapsed, global production slowed, and money outpaced goods. Inflation surged to the highest levels in 40 years. Once again, history repeated itself. Print gives, inflate gives, suffer. And today, inflation continues shaping our modern world in 3 major ways. First, it quietly erodes savings. A dollar saved today is worth less tomorrow, punishing those who delay consumption and rewarding those who spend or invest aggressively. Second, it increases dependence on debt. When money loses value, borrowing becomes attractive, and entire nations fall deeper into the debt cycle. Third, it widens inequality by funneling new money into the financial system first, long before it reaches workers or consumers. Shockingly, over 80% of all U.S. dollars in existence were created after 2008, and the top 10% own more than 70% of global assets, meaning they benefit the most as inflation pushes asset prices higher. The pattern is ancient, predictable, and intentionally misunderstood. Inflation isn't the rise of prices, it's the decline of money's value, and that decline is engineered. So what can you take away from this entire journey? First, inflation has always been a tool of power, not an accident of economics. Second, every major civilization that abused inflation eventually faced social or political collapse. And third, the modern system depends on perpetual inflation, meaning your financial survival requires understanding it, not ignoring it. The warning is simple: if inflation shaped the world before you were born, imagine how much it will shape the world your children inherit. And if you want to stay ahead of this system instead of becoming another victim of it, make sure to subscribe, share this video, and stay tuned, because on Dollaroid we uncover the financial truths most people never talk about.